FY20 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Shah from Axis Capital. Thank you, and over to you, sir.
Yeah, thanks, Raymond, and good evening, everyone. And on behalf of Axis Capital, I welcome you all to the Marico's Q4FY20 earnings conference call. We have with us from the management Mr. Saugata Gupta, MD and CEO, and Mr. Vivek Karve, CFO. Before we get started, I would just like to remind you that the Q&A session is only for institutional investors and analysts, and therefore if there's anybody else who's not an institutional investor or analyst but would like to ask questions, you can reach out directly to the Marico's investor relations team. With that, I would like to hand the call over to the management for their opening comments. Thanks. Over to you.
Yamla consolidated market share position with 90 basis points increase in volume share. As consumers are likely to be more value-seeking post-COVID, we'll have a stronger player at the bottom of pyramid and the core segment to drive volume growth and garner market share. Having said that, we will continue to have a three-pronged strategy on VAHO over the medium term, gaining market share in the premium segment led by aloe vera and dry fruit oil, where we have seen healthy traction at the top end, especially in modern trade and e-com, drive value in the mid-segment packs and aggressive participation in the BOP packs. Saffola continued its healthy run from the previous quarter and delivered a stellar 25% on a very strong base of 18% growth last year similar quarter. It was partly aided by the pantry loading in households in the early stages of the outbreak, which accelerated the already strong performance in Jan-Feb. Given the increased awareness towards health, Saffola seems to find itself in a sweet spot. Resurgence of in-home cooking will lead to a trend of eating healthy and higher consumption of healthy and trusted brands. Saffola is well placed to ride this wave of health awareness and should continue to consolidate its position on the health platform. Backed by media investments, effective brand communication and shifts in consumer behavior, especially among top-end loyal consumer households, whose in-home cooking occasions have nearly doubled, we are extremely confident of driving double-digit growth for Saffola in the near term. In food, the oats franchise has a very good quarter with a 23% value growth. We will drive innovations to new flavors in masala oats to suit the various regional palates and continue to build the brand relevance with health at its core. We also see opportunity for Fitify and Focusful in their respective niches and will continue to innovate in packaged foods to serve healthy in-home consumption needs of our consumers in the post-COVID world. Our discretionary personal care portfolio of serums, male grooming and skincare are understandably not favored and consumers prioritize essential items of daily use in the days leading to the lockdown. These categories have been under stress since they are relatively non-essential, are trending at a low run rate even in April. We are mulling over a low-value, small pack strategy to allow consumers to access some of these offerings in a slow economic environment, in addition to focusing on e-com and chemist outlets to drive consumption at the top end. Therefore, we will reduce our investments in these categories and channelize our energies towards aggressive share gain in our core categories, along with focus on health, hygiene and nutrition, which consumers are strongly gravitating towards in the current context and will continue to do so in a post-COVID world. We have launched Marico hand sanitizers and Veggie Clean in April and will look into broadening our play and build a sustainability portfolio in the near future. A similar initiative in health and hygiene is also being driven in Bangladesh and some of the other key markets. Coming to international business, Bangladesh was able to post growth since it was impacted only once the lockdown in the country was imposed in the last 4-5 days in March. The business continued to perform healthily, led by a non-coconut oil portfolio. Vietnam also ended in the green as the country had limited restrictions during the quarter. We have launched hand sanitizers in both markets to help consumers fight against the pandemic. Both MENA and South Africa had a tough quarter, given the already struggling macros and severe impact in primary due to COVID-led restrictions. I must add that the secondary decline in the Middle East is actually mid-single digits as compared to the huge primary decline because we couldn't export and transfer the stock in primary terms towards the last few days. We are optimistic of a recovery on ground in Bangladesh, Vietnam and the Middle East over the course of FY21 as per initial trends, which should enable the international business to stay on the growth path from Q2 onwards. Now let us give you a flavor on how consumer behavior and demand patterns may be shaped by this unprecedented crisis. I will cover some of the key shifts in consumer behavior which we have been agile enough to effectively respond to. The rising consciousness towards health, hygiene and the need to boost immunity, high incidence of in-home cooking or gravitation towards healthy, ready-to-cook and ready-to-eat, cut back on discretionary categories during a rather prolonged macro slowdown. Consumers are likely to be more value-seeking but will still prefer trusted leader brands. Further acceleration in online shopping and online media consumption and the recovery and the growth of the kirana. Therefore, we need to focus on 5 things to come out unscathed from this crisis and actually turn it into an opportunity. Firstly, we realign our portfolio to capitalize on changing consumer trends and preferences with launch of products catering to the needs of nutrition, hygiene and well-being in the current environment. Secondly, the severe disruption in supply chain has given rise to a number of alternative last-mile logistical options and new operating models. We have been proactively prototyping these in addition to introducing direct-to-home delivery portals for edible oil and foods in select cities and partnering with food aggregators to ensure uninterrupted supplies of food and grocery items of daily use to our customers across all channels. We will continue to test these various emerging delivery models to ensure where we can hit the ground running to those which prove to be sustainable for scale-up. Thirdly, we will be selective on A&P while we reallocate spend from non-media to media channels in the near term to drive share of voice in the core. Spend on a digital platform will continue to rise to further boost our e-commerce business, which currently contributes to more than 5% of our sales already. Fourth, we have been aggressive on managing costs across the organization, thereby challenging every cost element and applying a zero-based lens to each expense head. And last but not the least, transforming the workplace and being future-ready is key. We are already exploring aggressive work from home and automation programs which complement the new millennial way of working. With some of the restrictions in the areas that are not identified hotspots and away from city centers, the availability of manpower and supply chain operations has improved over the last few weeks. Production has resumed in all our manufacturing units, although at a reduced scale. We are focusing on movement of all food and grocery items of daily use to the consumers, subject to necessary approvals from local government authorities. We are back to recording 70 to 80% of our normal monthly run rate of FY20. However, in the near term, demand and market growth is expected to be volatile and it is difficult to have a view for the coming year just yet until more clarity emerges in rest of Q1 and Q2. With tight cost management, the company will strive to maintain the operating margin in FY21 at FY20 levels, which is currently around 20%. Before I conclude, let me say that we have had 2 relatively uninspiring quarters between Q2 and Q3. We were on a turnaround trend before COVID hit us, and our great agility and execution focus within Team Marico has only accelerated during the last few weeks. Therefore, I strongly believe that our coping ability has increased tremendously, which will help us in navigating through this crisis. Thank you for your patient listening, and I'm happy to take questions and stay safe.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Yeah, hi Saugata. Congrats on a good comeback in the Saffola portfolio. So that is my first question. In the first 2 months, how was the growth? How much of that growth is because competitive intensity from Umami, which is struggling as a group in the unlisted entity, and some of the other players, it has come down? Because in the first 2 months, my sense is not too much of panic buying happened because awareness, etc. might have been low. So could you comment on that bit?
If you look at it, Saffola growth trend had already started in Q3. In fact, Saffola, if you look at even the full year, last year also, Saffola growth rate was overall 8%. We had relatively modest or a very, very low Q1 and Q2. We grew 11% in Q3. And even if that COVID or this one had not happened, we would have delivered a double-digit growth in Saffola in Q4 also.
And edible oil raw material is inflationary, and you have become much tighter and more attractive to customer in terms of value. So how is the margin here versus say what it was 1 year back in this part of portfolio?
So I think as I said that and I would have mentioned it even last year that what we are doing is we are ensured and we have done this exercise in Saffola, two things. What is we channelize all our spends into giving consumer value, therefore taking out money from say, some of the POs and COs we used to do and give it to the consumers on a value, and also the fact that we also promote, if you notice, gold and total more than the entry point packs, because in the last one of the things we realized that when we used to promote active, it used to lead to a reduction in this one. So our focus is actually to ensure we promote gold and total, which has higher realization. So I don't think there is anything to be concerned about in Saffola, obviously margins. Having said that, for every company in this last 1 month, obviously supply chain costs would have gone up a bit, but then obviously it is made up by the reduction in A&P and other spends.
My second question is on the distribution. So this telecaller facility with 80,000 top retailers, have you done that before, and how is the cost structure and response? Similarly on the porter delivery and direct to home delivery portal, these are really good innovation you have done and some of the other companies have done. How much is it working in terms of response, and if you could discuss a bit on the cost structure?
See, our immediate endeavor is to ensure that consumers get availability, because at the end of the day, consumers are searching for trusted brands. Consumers are doing some kind of a loading, and if you don't make availability, and we realize that is the most important thing. So we are experimenting with different models. There is a telecaller model, could be an app model, there could be 2-3 with retail aggregators, and even we have started our in-store, which is a brand.com, Saffola in stores.in. So if you don't get your Saffola, please order through it. So I think right now we are ensuring ensuring availability. Give us 3 to 4 months, I think we should be able to give, which are out of these, maybe we are trying 9 experiments or 10 experiments, 4 will deliver value or 4 or 5 will deliver value. I think these are the ones we will scale up, and then the other ones will slowly withdraw. But I think it's too early right now. I think our entire focus is to make the product available, because for me availability is going to lead to market share and sales at this point in time.
And last question on VAHO and hair oil, work from home, there is much lesser need in terms of grooming, etc. A lot of Indians use hair oil for grooming, looking better also. So do you see that as something which would have impacted in April and the last 10 days, not looking into the supply side? And is that a risk? Because then it becomes a habit, right? You don't completely shy away from hair oil, but you reduce the consumption.
See, I think if you look at whatever occasions, if you don't go out, maybe you will wash your clothes less, you will wash your hair less, and you will use non-sticky hair oil less. Now the core hair oiling, which is pre-wash, I don't think it gets impacted. I would think the premium non-sticky hair oil portion, which our participation is slightly lower, that is where we have done some consumer checks. That is what the indication is, that a lot of male consumers use non-sticky hair oils for hair setting and grooming when they go out. That occasion would be less. But I don't think work from home is going to, while it will be a perpetuity, the large mass of Indian population someday has to go out and work. This work from home could be maybe for the top 2 or 3% of the population or 4% of the population. I don't think it is for that. So I don't think the core hair oiling as a habit is not going to change, but at the top end, I see some change, especially non-sticking hair oils, which are priced at a much premium. The non-sticky hair oils, which RPI are 1.1, 1.2, is not likely to get impacted, but there could be certain brands which are priced slightly premium non-sticky hair oils, they can get more impacted.
Okay, thanks. That's all from me.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. In your outlook, you mentioned that you're looking to enhance value proposition of recruitment packs in coconut oil. Can you provide some more insights? Are you looking at price cuts, or is it like driven by your outlook of lower raw material prices? Yeah, along the same line, your views on copra price. I read somewhere that it's slumped meaningfully in the current lockdown. So yeah, that's it for me.
Yeah. So let me just give you, obviously in the last quarter I had indicated that the price could be slightly inflationary. I think it will be slightly deflationary, and it could even further go down. People are not going to temples offering coconut. A lot of coconut chutney and everything is used, as you know, in lot of restaurants which eat out. So a lot of coconut demand has gone down. Obviously there are supply constraints in the sense that because of logistics and all, I believe it will be mildly deflationary right now. And we now know we have just done a market mix modeling and category growth driver exercise which are the recruitment packs, and therefore we will ensure that we will price. This is a great opportunity to take market share and ensure that people don't either downgrade or have the attractiveness to upgrade, even with the pricing. You must realize Parachute is one of the very few brands which are, manufactured very hygienically. People want to use brands which are trusted, untouched by hand, and therefore this is a great opportunity. And of course, to grab share in terms of distribution and in terms of the fact that there could be competitors with working capital constraints, unable to procure or unable to actually distribute. So we compete with a lot of smaller players, and therefore we will be aggressively pricing. And fortunately for us, I think earlier, as I said, the indication of the fact that there would be slightly mild inflationary, that is not the case as trends are now.
Sure. Just one more question. In Bangladesh, non-coconut portfolio is growing at a very impressive 25% plus. What is driving this kind of growth, and how sustainable is this? And how is the impact of COVID in Bangladesh? That's about it.
So Bangladesh is going to likely to open up while the situation I think is slightly better than India. They want to use the Indonesian model, as you know, which is basically they want to balance the issue of trying to get the economy rolling, and this one, and given a very young population, they believe that they need to balance both. So Bangladesh is most likely to open up. The lockdown was less stringent. The thing is, not only value-added hair oil has grown, some of the new products category, skincare is doing well, foray into baby is doing well. You must realize that in terms of sheer strength as an FMCG player, especially in personal care, we will be number 2 to the main giant leader there in Bangladesh. Our relative position is far more stronger. And therefore we intend to continue to leverage our distribution, brand equity to grow. And I think given the fact that our experience in diversification, and also I think some of the learnings which are there in India on NPD, we have been able to use this in Bangladesh, and given the fact that our strength is higher, we will continue to do the journey. We started 2 years ago where non-parachute was 10, it is now almost hitting 30, and hopefully in another 2 years the non-parachute component will become 40%. So we have entered baby category, and we will enter into 1 or 2 more categories in the next 1 or 2 years.
Okay, that's it from my side. Thank you.
Having said that, just one word of caution I think in Bangladesh is that obviously one of the biggest growth drivers in Bangladesh is the RMG business, and they will depend on the Europe and the US recovery. So therefore, the high growth rate that was witnessed in Bangladesh GDP might not happen this year. But having said that, given our competitive position, if the category growths are little lower, we can gain market share, and number 2, also continue to operate into diversification criteria. But the Bangladesh economic growth is likely to be lower than what it was last year, the boom that was witnessed.
Understood. Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, good evening, sir. My question is on the hair oil category in general. See, in hair oils, we have about 4 or 5 listed companies having some business of hair oil or the other. So we have a very good understanding of what the growth trends are in this category. And over the last few quarters, we have noticed keep COVID aside, last few quarters, hair oil growth has been slightly weaker than the general FMCG growth. General FMCG growth itself has been weakening continuously over the last 4-5 years, except for the spike during GST, etc. So, just wanted to understand the overall view you have on hair oiling for the next 12 to 24 months. Already weak category, seeing further weakness on the back of COVID, not because of supply chain disruptions or something, but because of a slightly longer lasting income or wealth impact that the consumers will see, which of course will affect all other FMCG categories, but also hair oils, which is not seen as such a essential category when consumers are cutting down their spend. So some thoughts on that, please.
So if you look at, I think, again, Percy, I'm happy to share the Nielsen growth. Hair oil, VAHO has not behaved so differently from shampoo, soaps and skincare in the last 3 quarters. So all the personal care, especially in rural, has got impacted. And I think in the case of VAHO, what has happened is there has been a bit of a, the market has moved towards slightly at the bottom end of the story. So I don't think, in terms of penetration, if you look at the household data, there is very significant change. What has exactly happened is that the market, as I said, has moved from the slightly premium. So there are 2 drivers of growth. One is, of course, the top end, which is being driven by modern trade e-commerce, the problem solution and the good sensorials, and at the bottom end, which is there. So I think if you look at, I don't see any difference. It is, you must also realize that, in the sense that what happens is that hair oils also will get advantaged by the crude, the fall in crude and the packaging. There is a lot of crude. VAHO is linked to a lot of crude. So therefore, the ability of the players to pass on pricing and make the thing attractive so that consumers don't downgrade. I think that is the issue. And the second thing I think, and VAHO, you must say it is unique, is that a lot of people might have the option of moving into smaller brands and downgrade, unlike other categories where the category is concentrated in 2-3 brands. It is little fragmented, there is a long tail, and therefore if the value proposition is not right, there could be a situation where people can downgrade. So we will ensure both of them not happening, but what I want to assure you is that there is no reason to believe, if you look at penetration, usage, and also the fact that the category has not behaved, VAHO has not behaved any differently from some of the other large personal care categories in the last 2 or 3 quarters.
Understood. So when I was mentioning hair oils, I was also in my mind considering the coconut oil also, because the main usage is for hair. And there also, as you mentioned for VAHO, there also is a option for consumers to go into smaller brands or even go into loose, as downtrading overall is probably expected to be a trend in FMCG, at least for some customers now. And we don't, unlike VAHO, where we have a price laddering, we have premium brands, we have economy brands. In Parachute, we really don't have that kind of laddering. So how do you plan to sort of protect your franchise in that segment?
So I think I mentioned it in this one. I would not like to get into details of it, in the sense that our endeavor is to ensure that for all the segments we participate in this year, we will try to ensure we cut all possible costs in the system and pass value to the consumer, so the consumer gets value. We agree that the disposable income of the consumers will be challenged, and therefore it is our endeavor to ensure that we have to, even if some of the category growths in all the categories we participate across our company, across the entire portfolio, if some of the category growths become lower, we will ensure that we continue to gain higher market share by driving pricing. And the second thing is by also continue to drive aggressively rural distribution, because I believe 2 things are going to happen. One is the wholesale channel will be further challenged because of the fact that there will be people not wanting to travel to urban areas to buy, retailers coming because of whatever COVID and other fear, and travel will get restricted. So therefore, companies with direct rural distribution are likely to gain. Number 2, I think, as I said, the return of the kiranas. So therefore, the companies with direct distribution in urban are going to gain. So I think it is at the end of the day, our job is to ensure that we provide value, we continue to make it accessible and start gaining share even if category growths are lower.
Understood. Second question, sir, on costs. Apart from advertising costs, which I'm sure most companies would look at scaling down, can you give some more details on what kind of cost restructuring you are looking at?
I can't get into details. All I can say is that, when you are constrained, people, when there are things are going okay, we of course are a company which is cost conscious. Even our cost structures compared to others, are relatively smaller. Having said that, I think what happens is whenever there are constraints, you get with the best ideas. So we are doing a zero-based, costing project, and it is just we are doing anything which are nice to do. We are cutting and we are looking at it very, very aggressively. I don't think advertising costs are going to reduce more than maybe 100 basis points, and that is because with 100 basis points we can also maintain share of voice, and also I believe given other categories are likely to, other sectors going to advertise much lesser, our CPRPs and impact will be similar even if I reduce it. So I see a A&P reduction of maybe 100 basis points, but we are looking at all costs, and I think the exercise has begun. We are seeing early gains even in Q1 as we speak, and I think it's an organization-wide program which we are looking at, including including ideas and looking at even the way we can save costs. Having said that, our first duty to ensure is that we protect jobs, and that is something which is important for us. But there are a lot of other costs which we can look at.
Right, sir. Thanks and all the best.
Thank you. The next question is from the line of Deep Maheshwari from Jefferies. Please go ahead.
Hi, good evening, Saugata. Hi, good evening, Vivek. My first question is on the current utilization rate when you mentioned 70 to 80%, and you also mentioned that fourth quarter had a channel destocking. So this 70 to 80% factors in that, or is there some bit of restocking which is also taking place, which means the real manufacturing number on a sustainable basis will be lower than what you called out just now?
I don't think we have been able to do any restocking, to be fair. And the reason is very simple. If you look at it, I would say the Saffola STRs will be half day almost. I mean that is the kind of this one. I think what has happened is, I believe still now, there will be in the rural part, I would say that we have, in a lot of cases, I don't think we have been able to reach. In a lot of states, as you may be knowing, there are very, very stringent rules during lockdown which reduce the supply chain availability. So to give you a perspective, if you look at, there is a primary-secondary gap which was there in March. Have we been able to do more primaries than secondary? The answer is no. In fact, I would think, as I said, that from the Saffola and food part of the portfolio, and similarly some of the high-velocity parachute packs, I think the STRs would have gone down also in April. So I don't think that restocking will be an issue, and I believe we have seen this in GST, we have seen this in DeMon. Some of the stock reduction that happens, especially in wholesale channel and all, are sometimes permanent. You only recoup half of it. So I believe that the distributor stocks have gone down, and even now in April end is far lower than what the distributor stock was maybe in February or January. And the retail stocks, especially, some of the retail outlets have not even opened, and I am very clear that in rural and wholesale the stocks have gone down.
Got it. And in April, the trends that we saw in March last year for the fourth quarter, pretty much are those. How is the category? Basically, is it stacking up in the same way that it was in the fourth quarter? I know typically you don't comment about post quarter numbers, but any sense on April in terms of Parachute and Wahoo will be very helpful.
I would not like to.
Given that these are exceptions.
Details, but all I can tell you is that other than the discretionary part of the portfolio, and as I talked about, I think the core part of the portfolio is trending more or less okay. Obviously, Saffola is far higher, but there is no concern on the core part of the portfolio. There is no concern on, some kind of habit change, as I said, we are seeing anywhere.
Okay, got it. And since you mentioned about consumers, so second question, since you mentioned about consumers will be more value seeking and the foods is rightly placed over there, how do you think about the foods business, and does that change, this crisis change your your launch activity in the foods? Let's say you spoke about 55, but if consumers are more, let's say, value seeking, is there a case to go more mainstream? I know margins are an issue in foods generally, but how are you thinking about this? Given in the context of crisis, and any sense on or any thoughts on going mainstream rather than just catering to the top end of the market?
So there are two kinds of polarity that is going to happen as far as the consumer is concerned. At the top end, and which will be primarily driven by e-commerce, there will be a huge focus on buying something on health and well-being and immunity. And mind you, there will be shift of spends because the top end consumer is not going to travel to Europe twice a year, is not going to go eating out or going for entertainment because there is enough disposable income available to get into the best quality nutrition well-being, and e-commerce is making that product available. So at the top end, I think 55 and Cocosol, as you know, Cocosol virgin coconut oil has very strong immunity properties, as we have heard from various readings in international literature. So they have immunity properties. So I think that will continue. As regards the mass, you are absolutely right. I think as the in-home usage occasions or consumption occasions will increase, which could be ready to cook or ready to eat, people also look at healthy and trusted brands for it because the number of occasions will increase, and therefore if there are opportunities in scale in food, we will do that. And the way we look at food margin is always, as long as better than Saffola edible oil, it actually is accretive in our food business.
Okay, got it. And the last question is on A&P, 24% decline in India or at the standalone level. I mean, is this just due to the due to the lockdown? So whatever you give in those 7-8 days, because this 24% drop looks too much, given that it was a sudden lockdown and you would have had contracts with the agencies, and also can you elaborate on this 24% decline, please?
So I alluded to it during my opening remarks that last year in the base we had launched, we had done the prototype of Kaya, we had done True Roots, we had done Creme Oil. So a significant portion of the reduction in spend was actually on the NPDs which are not there. There was no NPDs this year, this quarter. Okay. Secondly, if you look at, you are absolutely right. By the time the lockdown accelerated and we started getting a feeling at it post the Holy break, which was 10th and 11th, in any case, you can't really, so only perhaps towards the very end, fag end of the quarter, whatever could get could cancel got cancelled. So most of the reductions are in the base of the core. There are hardly any decrease as far as core is concerned in terms of the spend, and both in international and in India.
Okay. And just a follow-up to A&P, when you say 100 basis point at best decline in F21, that's on a full year basis.
Yes. Even on a full year basis, and I believe the first run modeling which we have done is that even at 100-120 basis points, you can actually maintain SOVs and CPRP. You will get a reduced CPRP and impact, there will be no problem. I'll give you some examples. A lot of money is spent on promoters in modern trade. Where will be the promoters there today? Anything which is social distancing, a lot of spend. Can you shoot a film? The earliest film shoot will happen, I guess, 6 months later now. Who is going to do a film shoot today? So there are a lot of costs which will anyway go down here. I mean, physical consumer research will go down. We have moved to digital research. So there are a lot of marketing spend which are automatically not going to happen. So I mean, getting out 100 basis points will not lead to any share of voice. In fact, I can still manage some share of voice increase.
No, sorry. My question was exactly opposite, Saugata. I thought that, 100 basis points should be the minimum because, while you are talking about SOB, but I'm guessing that, given the context that we are in, the savings could be far higher than what you are...
Again, it's very early to say, but, in fact, I alluded to participation in foods and health and hygiene. If there are opportunities, why shouldn't I invest?
Right, but at the same time, VAHO will go down quite a bit, right? If the consumption is that much less, then, the savings will also be that much higher, right?
VAHO, I think it's too early. Again, if you look at the pyramid, as I think, let me just address this again in VAHO. The core of VAHO is not going to go down drastically at all, okay? That's the non-sticky part of it. And if you look at the non-sticky and the premium part of the business, we have a disproportionately lower share. So, our initial trend suggestion you get trends, okay? The broad trends according to us suggest that anything which is 1.3 to 1.6, the impact, and especially if it is non-sticky products, the impact is far higher, which are used primarily for post-wash.
Okay.
So, if you are asking me, is Amla desperately impacted, the answer is no.
Okay, and just to conclude this point, basically, does that 100 basis point in a way signal, let's say, you eyeing market share gain, and therefore that number is, because I would have imagined that number being down by like 200-300 basis points on a full year basis.
Boss, it's like this, listen, it's very early, it's very difficult now to say. I am not I can't model it right now. I just gave you a number. Our initial trends indicate now quarter one the drop could be higher. I am assuming things will be partly normal, and therefore I am putting a number. Now, it could be 150 to 100, my initial going in position, it could be 100 to 150. It's very difficult to say at this moment, but there are three things we are going to definitely do. Continue to provide value to the consumer. I would rather go for fixed overheads than getting on AMP, and I will spend less money, far more on non-media than media, and our objective is, even if category growths go down, can I maintain my volume growth by gaining market share?
Perfect. Thank you very much, Saugata.
Thank you. Before we take the next question, we'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. We take the next question from the line of Aditya Kaman from Goldman Sachs. Please go ahead.
Hi, good evening, and thanks for the opportunity. So both my questions are on Sephora. Firstly, did you see a disproportionately higher sales for your larger SKUs for Sephora? When you talk about the tailoring in particular, was this one of the trends that you saw?
Yeah, you're absolutely right. I think this is the time to actually make ensure that the existing loyal households continue to get Sephora and consume Sephora. I can tell you from my own experience, the number of, as I said, the consumption in terms of eating at home has actually more than doubled, and therefore the existing households consumption is likely to get doubled. Obviously, we have capacity constraints, which we are trying to unlock, and therefore it makes much more sense to drive growth in the large packs. This is not the time to drive penetration of small packs in Sephora, but to ensure that your existing loyal households who are consuming much more get their Sephora. And therefore the growth, and it also helps in productivity in the plant. As you know that at the end of the day we are operating maybe with 30% people because of social distancing, other things, to produce 5 liters as opposed to 1 liter, your productivity drastically improves.
No, fair enough. That completely makes sense. But is there a risk because of this that then the demand is a little bit lower given that there's probably been a little bit of pre-selling demand going into Q4?
I think, that pantry loading happened in March. I now think it's a kind of a rotation sale that's happening. So I don't think right now you see panic buying or the pantry loading that pantry loading happened more in the second and the third week of March. Right now we are not seeing that panic buying because at the end of the day, as I said, that people in a lot of red zones are not necessarily going out. They are obviously ordering the larger pack sizes because they don't want to increase the trips frequently. But we are not seeing significantly any pantry loading as such. As you know, we have e-com, you can take daily trends and analytics in terms of the people who are existing consumers. So that panic buying is over.
Thanks. And just last question here. In terms of the price of competitive edible oil, has there been any sort of sharp differences there between Saffola and any of your competitors? I mean, and not just with like-for-like oil, but even different types of edible oil in more or less your price point?
I think in December, January, there was a subtle inflation where I think there were some price hikes in some of our competitor brands that time. Right now, the outlook is that there will be, so the ballpark premium actually may have reduced a bit. But, I believe over the long term this year, given the supply-demand situation, it will be mildly bearish, the input costs. As of now, obviously, given the fact that there is a scampering for raw material and other things, there is slight bullishness marginal in the procurement and supply chain maybe. But in terms of relative terms, the premiums are reduced because we haven't changed our pricing and we have kept uniform pricing for the last 1 year actually.
Fair enough. And this will be largely rice bran oil, right, which is competition?
It could be anything. People upgrade from sunflower, people upgrade from different other species.
Fair enough. Thank you very much.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Good evening, Swagata. Thanks for the opportunity. Swagata, you called out that the missing rural growth has been the problem area for personal care category for quite some time. Now, if you see last year on most rural macro tracker points, in terms of rainfall, increased MSP, direct benefit transfer like PM Kisan and all, they all suggested that rural has to perform better. Now, in spite of that, the deceleration continues. So, in your prognosis, what is keeping rural consumers away from personal care category?
I think if you look at it, that the rural, the benefit of the, whatever the government has done or the produce that happened, the good rainfall was supposed to start, that some recovery trends which we are noticing. In fact, if you ask me, our Jan-Feb trends were not that bad. Okay, so there was some improvement of it. So I believe that the overall disposable income has not significantly altered. They were about to alter when I think this COVID thing happened. Going forward, I would say that it will be stressed, although I must say that compared to, I believe that the unemployment or lowering of activity will be more happening in urban than rural in terms of economic activity and therefore disposable income. The issue in rural will be slightly different. According to me, if you look at the rural, the wholesale as a channel will become difficult, the entire supply chain mechanics of it, and therefore direct rural distribution and value will be the two drivers of growth in rural. Having said that, obviously we have to be very, very watchful. We don't know exactly what has been going to be the impact in terms of consumption going forward, but whatever indications are, according to me, and whatever crop and whatever information we have, I would think the bottom of pyramid growth in the urban poor will be much more impacted, because if you look at migrant labor, they have returned. I don't know how many will come back to urban, and actually consumption might grow in rural. So I would be more concerned about urban bottom of pyramid than rural in the immediate couple of quarters.
Great. Second question is, in last 40 days, we have seen a lot of disruption in terms of supply chain, distribution, and even the consumption pattern.
And then Indian businesses, like always, have used all the jugaad possible, if I may call it, to service the consumer. So out of all the changes that we have noticed in the last 40 days, which you believe will stay with us for a slightly longer period even after normalcy comes back, and which are much more transient, like Kirana gaining market share? Is it a structural change you think this will redefine the Kirana's game market share in the game, or these are all transient and there are very few structural changes which will emerge out of this?
I think there are clear 3 structural changes I see happening. One is Kirana plus e-com. The fact that I see Kirana is coming back in terms of people going to because at the end of the day, a quick shopping trip with social distancing, I think that is an important thing. The second is e-com, and therefore I see a lot of modern trade players moving to doing both online and brick and mortar. And I think this will happen. The third thing, there could be significant changes in urban GT, the fulfillment as well as the order taking. I think we have seen a lot of changes and a lot of experiments that are happening. The traditional order taking, which is a distributor order taking followed by a delivery man of a distributor fulfilling it. Today there are multiple models. In fact, there are certain cases, it can go to from a CNFA directly to a certain the way the modern trade is serviced. So tomorrow there could be multiple ways of fulfillment, and I think there will be structural changes in that. The last change I am seeing, which is noticing, if you look at a lot of these beauty outlets and premium personal care. Now the premium personal care, there is still a pent-up demand, okay, and while the occasions, people moving out has gone down, but still there is some demand, whether it's some of the premium. We see a transfer of that demand, and that could be transient, not necessarily permanent, from beauty outlets which are currently not open to chemists. But anyway, the chemist guy is open. The chemist guy is servicing you. He's doing a home delivery of the medicine. He's also doing the premium personal care there. So that is one more trend which we are noticing. So therefore, a lot of brands which are unable to sell through, which we are selling through cosmetic wholesale or beauty outlets, are actually selling through chemists today. And maybe the last structural change that will happen is some of the salon brands, which are sold today. People will take time to be comfortable visiting salons, as you can see a lot of DIY personal care, salon brands at home.
Thanks a lot, Saugata, and all the best.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Hi, good evening. So 2 questions from my end. So just wanted to a little better understand the situation over the last 5 odd days. So within your entire India portfolio, you would be now running at about 75 to 80% capacity utilization. Is that correct, you said?
Yeah.
And in terms of touch points, you have 5 million kind of touch points. From that standpoint, how much progress do you think you have made in the last 40 odd days? Would that also be 75-80%, or would it be probably a little lower?
I think it will be lower again, as I said, but it depends also on the situation where the number of distributors and outlets and the red zone. A lot of in a lot of cases, people are coming to a distributor point to pick up, or we are using some other alternate delivery points because the distributor is not ready. So in terms of, if you want to ask me the capacity of distribution, obviously it is getting channeled maybe a little bit through high throughput outlets.
Okay, got it. And safe to assume now that technically you are allowed to make and sell everything, but you would take your pick depending on how the market is responding.
Yeah, obviously. I think the issue is that wherever, I think ultimately it depends on the local government authorities. At the end of the day, wherever they permit, we strictly follow that. And number 2 is, for us, what is most important is people's safety and in the factory. And obviously, as you know, that if you operate with strict measures, including people staying within the factory premises, maintaining social distancing. The capacity of the factories today, they are working at a lower rate, obviously, and so which means that there's low stock in the channel, low stock in the depots, low stock in the factory. But we are ensuring that we maximize on it, and therefore I believe that the entire the stocks in the pipeline right through the system has thinned completely.
Got it. My last question is on the foods portfolio. So for F20, could you give us a number of how large the portfolio is now in terms of size?
Around 200.
So you ended at close to 200 for the year?
Yeah.
Okay, that's it for me. I'll come back for more. Thanks.
Thank you. The next question is from the line of Aman Rathi from Morgan Stanley. Please go ahead.
Good evening, sir. I have two questions. The first one is basically based on the COVID situation, how do you see the next year business plan and what are the growth estimates you have? Maybe if you could walk me through the quarter-on-quarter basis. And second, what all issues have you actually faced with respect to the logistics parts in delivering the products or in receiving the raw materials, etc.?
So I think it's very difficult to, as I said, to give you a view on quarter, and I'm not going to give you a guidance. I think all I can say is that we are 70 to 80% of our annual run rate. Our objective, and we hope things will normalize. Our objective will be to ensure that we maximize our availability. We gain market share in places where even the category goods go down a bit. We provide value to the consumer and participate in new categories in health and hygiene and maybe a little grow more in food. So I don't think we can give you a number right now, a guidance. And of course, I said that we will maintain our EBITDA percentages and have a high cost this one. So all these contours are right. We don't, it will be more, I think, fair to give a number, look at an outlook, let things pan out over the next 2-3 months. I think the next 2 months are extremely crucial as India eases its lockdown. And also we have a situation where Bangladesh and some of the international markets have eased the lockdown, so we'll see how that pans out, and maybe we'll be in a better position in end July when we have the next call in terms of the next quarter to give a broader outlook. Your next question on the supply chain, can you just repeat the question, please?
Okay, yeah. So what all issues have you faced with respect to the logistics parts, both in terms of supplying the finished goods as well as the receiving the raw material, given that are you facing any driver availability issues or lockdown measures, restrictions, etc.?
Yeah, so I think it started off, obviously there was a truck availability issue, interstate transfers, availability of labor and CNFA, labor to load the stuff. Things are progressively improving. I think with the fact that the government, the ministry, Home Ministry coming with different advisories, notifications in most of the states, there is either the central or the state e-passes which are there. Things are improving, but I think where we are very comfortable as far as all the RMPM is concerned for this quarter, more or less. We don't also have too much imported material. We don't use too much of imported, like supply chains would have got disrupted. So, and I think we also, as you know, most of our suppliers and the vendors are reasonably, medium to large size suppliers, and they have also started, what I say, they have started at least by April 10th, a lot of them had started, and some of them started after April 21st. So we are okay as far as RM and PM is concerned. The only issue, as I said, is that as far as Saffola is concerned, obviously we are almost selling day to day.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Karthik Chellappa from Buena Vista. Please go ahead.
Yeah, thank you for the opportunity. Two quick questions.
Firstly, apart from normalizing inventory at the distributor level, are you providing any other form of support to them to optimize their ROI at this point?
I think our obvious objective is to ensure that we will support them. There is selective credit extension. Also, what we have done is we have ensured that we, for all the distributors, sales force, and all the third party, we have given them COVID insurance. We gave them a 1 month, some kind of a support, in terms of cash payout to all the, these people who are in the third party, as in the distributor sales force. And we are also ensuring we invest and train them on all the entire health, hygiene, and sanitation practices. And we are going to ensure that we continue to support them as we move. And I think also we have given them a lot of support in terms of delivery to the final one, since they couldn't manage to open their delivery points. In a lot of cases, we have helped them in supporting through third-party delivery systems.
So most of these seem transient. So once the COVID impact wanes and we start to get into some sort of normalcy in 2Q, can you say that by and large it will be back to the original term?
Well, I think during these, as I said, there are certain cost-efficient models we have, looked at, and some of the efficiencies which could have scale, which could have automation and other opportunities. So we will definitely work with our distribution partners to ensure that they are profitable, because as I said that one of the things we were grappling with last year was this urban GT ROIs. I am glad to say from Q3, when we started implementing the minimum operating price and different assortment across channels, those channel conflict issues went off. We took a hit in Q3 in terms of, as you know, in e-com and modern trade. So I think supporting our our distribution fraternity is topmost in our minds, and I believe this COVID proves that some of the experiments which we are doing, when we scale some of them up, it will be actually efficient from both the points of view, from the distributor and from the company, and it could be a win-win.
Got it. My second question is on that.
Lastly, I think there has been a certain stock correction in the system. That itself, the investment would have gone down, and we might not want to, beyond the point, pump that also. We might say that, with an efficient system, we can operate with even lower stocks.
So basically, that inventory level will become the new normal, right?
Again, it depends. At the end of the day, we have to balance inventory and also fill rates. So we have to see everything.
Okay, great. My second question is on Vaho. So we have a three-pronged strategy, but if we look in the mid-segment and premium segment, where Marico is kind of underrepresented, do you worry that if the growth slowdown prolongs, the category growth itself may come under pressure, which means that the propensity to experiment is low, which makes it difficult for a challenger to gain share?
All I can give you a strategic premise that in case there is a challenger who can cause disruption, especially when disposable income is low, the challenger can certainly cause price disruption. But I see that there are two things which are going to happen. I don't see too much problem. In the problem-solving segment, people are buying it for efficacy, though they will continue to buy for efficacy. I think the vulnerable portion of the portfolio in the Vaho, we are least impacted simply because our presence in the premium non-sticky is far lower than some of the other players.
Okay, but you would still believe that the share gains in that segment will still be possible even if the category growth is under pressure?
That is because the share gain is happening mostly in modern trade and e-com, where our strength, I think amongst all the players in this segment, as you know, our modern trade and e-com component of business is very high. And therefore our strength in that these two segments are very high, very good, and our ability. So we will like to premiumize and participate in that category.
Got it. Thank you. Thank you very much, and wish you all the best.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Management. Please go ahead.
Yeah, thanks. My questions have been answered. All the best. Hello.
Thank you. We move to the next question. The next question is from the line of P. Tendulkar from Rare Enterprises. Please go ahead.
Hello.
Yeah.
Thanks a lot. Sir, just two questions. How much of your own distribution, direct and indirect, you are able to reach right now after the 3rd May step down on the lockdown has happened? That is first. So that is the bottleneck, as you highlighted previously, that bottleneck is the availability of the stock in the distribution system. That is one. And second is your Citify, that is the food portfolio. How is the overall acceptance as compared to any brand journey life cycle? In its like if you compare a successful brand and its life cycle, do you think that Citify can turn out to be a big thing in next 5 to 10 years? Thanks a lot.
So I think in theory, 70 to 75% of the distributors are open. Now, at what capacity they are functioning, it could be slightly lower. And I think sometimes it is a function of their location, whether they are near a containment zone, and especially in some of the red zones. We have also, I must say that beyond the top rural towns, the visibility in terms of our sale right now is slightly unclear because beyond stockist, how much actually vans are running. Billing is still erratic. They might not be running the vans, and as I said, that the last mile is still a little dark because they are not necessarily uploading everything on our system right now. Because in a lot of cases the salesmen are not coming. So I would say that's the broad this one, that in theory 70%, 75% of the distributors are open. And when I mean open, they're not necessarily open on all the working days, but sometimes the local authorities close down an area. So this is how it is operating, and maybe 50-60% capacity they could be working in terms of servicing the outlets. Okay. With regards to the second question, I mean, Citify has been only 1 year, and has it been a grand success? No, but some of the things like green coffee and protein shake, I believe has potential. And we will see how the brand stands now. And I think, as I said, that we have to be agile to the new consumer needs, and we will see how it pans out. I would say, if I had to rate the Citify performance, I would say it is average plus in the first year.
Right. Sir, just last question. So in terms of distribution, what is the number for direct and indirect in your retail outreach?
We reach indirectly totally, I think, 5 million, around 5 million and 1 million direct. And we have been growing. In the last 1 year has been 5.3 million is the right number as of March exit. And I think we are giving a huge thrust on 2 areas, and we will improve that thrust as a direct rural distribution. Correct. And the second thing is urban, which we have been growing in chemist, cosmetic and food. We have to relook at cosmetic, but certainly will continue on chemist and food.
Correct. Just one clarification. When many companies say that we reach directly into this retail outlets, it can mean various things for various companies operationally. So when we say that I reach 1 million outlets directly, that means that your company has all the data related to that, and your company
and a third-party sales force of anybody. The data is there, and anybody, a third-party sales force, either of a distributor or a super stockist, is billing to that outlet.
Got it. Okay.
Secondary is happening from us. That is the definition.
Right. Okay. Thank you, sir.
Thank you. The next question is from the line of Krishnan Sambamurthy from Motilal Oswal. Please go ahead.
Yeah, hi. Given that you mentioned that there's been a selective credit being extended to the trade, and there's also been a relatively sharp increase in the proportion of modern trade to total sales, would you be satisfied by the fact that your receivable days increase was limited, and how do you see this metric going forward?
Can I ask Vivek to respond to this?
Sure. Hi, Krishan. As you know, towards the end of March, we had to extend credit to some of our distributors, both in the urban as well as rural. But I guess once normalcy returns, we will be back to our own credit cycle of the past. Also, given the fact that the salience of last few days sales was more in favor of the modern trade, that is another reason why you will see the distributor days going up towards the end of March. So barring a few chains, I think we receive our collections as planned from the modern trade. The CSD outstandings have also been on the rise, not just for us, for most of the FMCG companies. Hopefully, once normalcy returns and CSD gets its allocation from the center, we will get our money back. But having said that, it has a sovereign guarantee, so we don't have an issue on the credit quality.
Okay. How much has been the extension in case of CSD?
Sorry, can you repeat your question?
How much has been the delay from CSD?
I don't want to be very specific here, Krishna.
Okay. And on Saugata's point on modern trade possibly seeing a lower salience over the next few months as Kirana as well as online increase, e-commerce increase, do you therefore also see some moderation in the credit period as well, overall receivable days as well?
Very difficult to say exactly how it will pan out, but if e-commerce were to become larger, e-commerce receivable days are more or less in line with the modern trade receivable days.
Okay.
And just to clarify, I think what I said is that Kirana, I think Kiranas which are declining might go up, and not necessarily. We don't have an idea of how it will interplay between channels, and as I said that brick and mortar modern trade also could do home deliveries and do online. The only channel which is definitely going to get impacted, according to me, is wholesale.
Okay. Thanks a lot, sir. Thanks for this.
Thank you. The next question is from the line of Amar Kalundekar from HDFC Mutual Fund. Please go ahead.
Yeah, hi, thanks. I just have one question. This pantry loading that you saw in Saffola, can you explain broadly what part of May did it start, and was it mainly in modern trade, was it in general trade? Around when did it actually start?
I would say towards 17th, 18th it could be. I mean earlier, not before that. And I think there was the first, rumor of, and it's mostly concentrated. It will be in high throughput retail outlets and modern trade.
And your billing continued till what date?
Billing as in primary? Primary got impacted immediately after the lockdown. It was mostly some billing we could do to modern trade.
Okay, so bulk of this happened between, let's say, 16, 17 to 24th of March.
No, but modern trade had stocks, no? So to bill, to sell.
So from your side, primary, I'm talking about primaries. Yeah, so I will communicate.
Out after 23rd. Modern trade, and whatever primary happened was mostly into modern trade. And but the buying was we billed modern trade, till before the cutoff, which is around 27, 28, 29. But we were billing only essential goods like Saffola and some of the other essential goods, but gradually it was Saffola. But modern trade had stock to sell because immediately after the lockdown, first few days, I think there were very few other outlets where they were sporadically open, and the distributors' points were also closed mostly.
GT was practically sort of not happening from maybe 24th.
It's very difficult to, the regular GT never happened. So now, if some distributor was open and somebody went there to buy, get it, largely I would say that GT distribution activity was almost shut in the last 7 days. These people going into the market that had stopped. Only towards the end the passes happened and it started improving from April, the GT part of it, from 2nd, 3rd April.
Okay, yeah. Vivek, you were also saying something, I interrupted you.
No, I think it's not the answer. Thank you.
Okay. Okay. Thank you, sir.
Thank you. The next question is the line of Shirish Parvesi from Central Broking. Please go ahead.
Yeah, hi, good evening, and thanks for the opportunity. Just two questions. Have we taken any pricing action in Jan, March quarter or April?
In Jan, March, we took some pricing action. Jan, Feb, we took some pricing action on Parachute, yes, which was the last of the Parachute pricing action, and one pricing action on Jasmine. Now pricing action. But largely the Parachute, because as I said in the last call, because of stocks of old Parachute, old price stock lying in the system, we were sometimes given as consumer offers, but effective pricing we took on Parachute.
Yeah, so what I wanted to understand, as you said that the discretionary part is going to have a disruption. So you alluded that you need to do some action in terms of packs. So do you think a PCNO would require some more price point correction, or would you think you will need to have a recruiter pack? Because you somehow, I hate saying that down trading. I'm saying the consumer skewness will be happening for value for money. So is that correct assessment?
If you look at quarter 4, there is a 4% already pricing built in, -8 and -12, the value growth.
I understand that.
So that will continue to flow through, and maybe, as I said, that pricing always need not come through, just basic this one. There could be a play between, consumer offer, trade offers into end pricing. Our endeavor is to ensure that we drive consumer value, and number two, if as and when the things open up, there could be a situation where I can grab even retail share of shelf through actions. So, I think both through these two, my objective is, can I make my product available at an attractive this one? Because in in this segment, I can have a competitive advantage in terms of gaining market share, independent of the category. So what I don't want to do is, even if there is a category doesn't grow as expected, can I make up the volume growth through market share? And I would think that there has been a change in our outlook towards Cupra. I was saying mildly bullish in the last call. I would say now it will be mildly bearish.
Exactly. That's what the point which I was trying to drive. So when you have a cushion, would you think the consumer demand can happen in rural, as you said, that you need a pricing action?
Yeah, we could. As I said, I'm open to temporary. For us, as I said, I will do everything possible to give consumer value to grab market share and maintain volume growth independent of category growth.
Okay.
Cost savings can come from somewhere else.
I got it. Just quick question on the new products what you have launched. So, I was reading Veggie Clean is one of the products of its kind. Not getting in too much on hand sanitizer, but could you say in a medium to long term, how big is this opportunity, or do you think there are some more products can come on hygiene or health platform?
Well, again, let me tell you, we don't want to just jump into the bandwagon just because everybody is doing it, and we want to create a differentiated brand, and therefore we believe that obviously health and hygiene is here to stay. Having said that, once the ramp up of production of the big brands happens, only brands which will survive are brands which are little differentiated and brands which are known. Otherwise, there are maybe some, as per Nielsen, some 200 odd people have just launched hand sanitizers. What we intend to do is, we believe that this is a trend. We believe Medicare is a brand, has legs, and therefore we will participate in maybe a little bit, we were wetting our feet, but we want to be a little more serious in it. But if we are serious in it, we want to first ensure that there is a differentiated positioning or something is there. just because it shouldn't be a fact that everybody is launching it. And because VeggieClean is concerned, I think it's an innovative concept. Again, the need will be there and the need is going to be here to stay. I think the post-COVID world, people will be very, very concerned about the health and hygiene. Yes, even if a vaccine is developed or whatever, I think people's attitude towards health and hygiene will be, I think, significantly permanent, I would say. And this is an opportunity which we have to invest behind in terms of category creation. And therefore, again, as I said, that we will use and digital as a media, and we will invest behind this. And we believe this category, both the overall health and hygiene and VeggieClean in particular, has legs, and we will invest in it.
Okay, got it. Just last quick question on the distribution front. I got what you're saying, direct, indirect, and you also said the wholesale is not coming back, or probably after demonetization, wholesale is crippling. I was been given to understand that cash and carry is also picking up its own route in the modern cities, say maybe of top 40 cities. But in the rural, when you say that the wholesale decline is going to be there or it is eminent, would you say that the other legs or other distribution delivery models which are evolving will be sufficient for us to penetrate those rural markets?
No, I talked about direct distribution. I think when I talked about wholesale, and I mentioned traditional large wholesalers in the urban. In rural, there are a lot of these small quasi wholesalers which we reach directly. And the question is that how much of the throughput you do through large hub towns where traditional this one is there, but feed semi wholesalers do much more vans and distribute. See, the rural payback is around 2.2 to around 2 years, payback. I believe that anyway, with GST, obviously GST compliance was not that high, but as GST compliance increases, the arbitrage model will reduce, and therefore, the wholesaler versus the cost difference between direct rural versus wholesale will actually, reduce. Number two is, if you do direct distribution and rural, you can do much more in selling. So having said that, we are now far more determined towards aggressively to engage in rural distribution. And some of the places where we have done in the last 6-7 months where we expanded rural, we were seeing dividends.
Okay, got it. So what I wanted to just check is that the feeder wholesale market or feeder town is still intact, and that there is no issue in terms of service coverage.
I didn't get you. Just can you repeat it?
So when I'm saying wholesale, I understand your explanation in the urban market.
Yeah.
But in rural, the feeder markets or feeder wholesale is still under our control, and we are servicing them.
Yeah. So what we will do is we will take far more accountability in direct distribution of it, and I believe that it is important that we invest behind that rather than so therefore reducing our dependence on the urban wholesalers.
Okay, got it. Thank you, and all the best to you.
Yep.
Thank you. Due to time constraints, we'll be able to take the last two questions. We take the next question from the line of Avnish Roy from Edelweiss. Please go ahead.
Another two quick follow-on questions. What portion of your portfolio will be discretionary? I understand these are all very strong brands, but in the current context, what will be discretionary in your mind?
Let me just tell you, I would call it discretionary plus semi-essential. It won't be, I think it won't be hardly 10-15%.
And second question, this is a question not on...
We don't have institutional business. A lot of players also have institutional businesses. We have zero almost institutional business.
Correct. Second question is not on Marico specifically, more on sector. You are an expert and have been in the industry for so long. So compared to say a GST crisis or say a demand crisis, obviously things are looking far more worse here. So in the full year of say FY21, the entire sector, could it see a high single digit or even double-digit decline. 1 month is already gone and there's still no clarity. I'm asking not as a guidance for Marico at all. This is more as a gut feel on the industry. How bad can it be for the entire year?
I think it will be very difficult for me to guess. I am neither an economist nor a forecaster, neither an expert. I don't do podcasts, so very difficult for me to actually give a number. What I can say is that the staples, food, what I know is the winners in the sector is, food, health and hygiene, what are regularly used, anything which is used out of home, impulse, or which are used in terms of, what I call people trading up into premiumization, will likely to, reduce. But you never know consumer behavior. If you see the luxury revenge buying in China or today the queues in terms of liquor shops in India, you can't predict the consumer.
Right. And the vegetable wash, was it planned before the corona? Because it seems quite innovative and such a short time in planning, etc.
My team, I think they came up with the idea of this. It is again a part of the, I think we ran a innovation bank and it was an idea which was there. And to be fair, this was one of the brands which we had in the entrepreneur before we purchased the brand in Vietnam. He had similar kind of a product. So we had this idea in the innovation bank. Okay. And sometimes when you have your personal pair, you tend to innovate more.
Okay. Thanks a lot. Thank you.
Thank you. We take the last question from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi. Just one question. On the hair oil side, so any anecdotal evidence you can share that you're picking up in the market that you are seeing kind of smaller players already struggle through this process over the last 1.5 months? Are you already seeing that, or is that more of a fairly educated hypothesis that you're building on over the next 12-18 months?
I can't get into specifics of it, but if you look at some of our stronger brands' performance in April, I think is especially where our distribution is reasonably active, and as I said that we have been able to run our some part of our rural distribution, some part of our urban distribution, in spite of the wholesale channel being largely closed in urban centers. I think we have done well, and as I said, this is independent, and actually I'll give you a funny, strange correlation. People think people are struggling in red zones. Actually, stronger brands with better distribution are doing better, I think, in red zones. So the green zone is a kind of a level playing field in some extent,
True. That makes sense. Whatever. That's it for me. Thank you so much.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Yeah, so good evening to all of you. It's almost 1.5 hours now, so thanks a lot for listening in the call. We wish all of you a safe stay at home during the lockdown, and we are quite hopeful that the economy will come back, and with adequate resilience, Marico will be able to post a better performance in the quarters to come. So that's it from our side. Good night and stay safe.
Thank you very much. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect the lines.